Good morning. My name is Philip Williams. I'm the CEO of IsoEnergy. We are a leading diversified uranium company in Tier 1 jurisdictions. We're advancing the high-grade Hurricane project in the Athabasca Basin, where Ross is, and near-term production in the United States. So investment highlights of our company, we really think we built this company for the current and future uranium market. And what I really mean by that is we have near-term production, which we can get leverage to the current high prices, and prices in the future in the medium term with our development projects, and in the long term with our exploration portfolio. We're diversified across Tier 1 jurisdictions across the world for a reason. Historically, jurisdiction risk is huge in the uranium space, and single asset, single jurisdiction companies have been inherently risky. We're focused on Canada, United States, and Australia. Those are the best jurisdictions in the world for developing uranium projects. Across the portfolio, we have a very substantial uranium mineral endowment, over 300 million pounds across the projects. I'll show you more about that in a second, including the highest grade project in the world at Hurricane. We have a focused production strategy. We'll talk to you about our near-term production in the United States. We announced this morning some work programs that we're undertaking in order to move those projects ahead back into production by the end of this year or early 2025. And we've proven leadership. You'll see later in the slide, we're very well staffed on the technical side, both in exploration and in development. And the team behind the company is the same team behind NextGen, which is obviously a very strong and standout team. Here's our capital structure. We've got about a $700 million market cap. Between cash and securities, we have about $80 million on the balance sheet today. We're very well institutionally held, and we have some strategic investors. I mentioned NextGen. They own 34% of our company. Energy Fuels, who's in the audience here today, owns 5% of the company. The ETFs own quite a bit. And then we have some of the leaders in uranium investing also in our company. Sachem Cove is at 2.6% and Mega Uranium at 2%. And we're very well covered by analysts on the street. So I just want to put our company in context with the universe. And IsoEnergy, the history and how I got into this role is at the end of last year, we did a merger between IsoEnergy and a company called Consolidated Uranium. That was a company that I started in 2020. And really the idea was how could we take this business and make it very competitive with the leading uranium companies in the industry. Those are the names that are on the list here. And we think in this market, particularly, size does matter, and being a bigger company has a lot of advantages in terms of access to capital, getting attention of institutional investors around the world, and trading liquidity. So with that merger in December, we clearly have put ourselves, in our opinion, in that top list of names. And how do we compare with these companies? So in terms of mineral endowment, we're right up there. You can see in the second chart. But importantly, it's when we put these businesses together, we said, okay, what are the characteristics of a company that can be successful in the uranium space? And these are the attributes that we list on the left-hand side of the page. So we think a successful company should have production potential, restart potential. We have that. Many of the other companies you can see on that list have that. High grades, and by that I mean plus 1%. We have that. You really have to be in the Athabasca Basin to have that. We're there. We have that exploration, discovery focus. That's a big part of the DNA, particularly that came over from the ISO side. We're going to continue to spend time and energy on exploration. I'll show you some of the work we're doing. We're drilling our project in the Athabasca right now. Diversification, both on the asset level and in the geographic level. Again, having been around the uranium space for almost 20 years now, this concept that single asset, single jurisdiction companies are inherently more risky is as true today as it has been over the last 20 years. And so that diversification we have, and you can see that the peers on this table, a lot of them have that, and exposure to those key jurisdictions. So we think we compare very favorably, and hopefully we can move towards the left-hand side of this chart over time. Here's the portfolio. Again, it's a global portfolio focused on Canada, the United States, and Australia. We do have some projects in Argentina. And that's a lot of projects, and so, okay, that's interesting, but what are we going to do with these projects? And really, this is the strategy. So strategy is to become a multi-asset producer, multi-jurisdiction producer, and that's the right-hand side of this chart. We do have past-producing mines in the United States, Tony M, Daneros, and Rim, which we're going to move back into production. And the goal really is to move projects from the left-hand side of the page to the right-hand side of the page. Hurricane, which is really the marquee asset, and you'll see why in a second, is in the Development category, I would say it's advanced exploration development, and we'll talk about why that's the case, but we're ultimately moving that to the right-hand side of the page. And then it's exploration. We have exploration projects in the Athabasca, in Australia, and Argentina. We're going to do work on those projects to see if we can move them further to the right-hand side of the page. And then on the far left-hand side of the page, we have what we call our call options. This is the Coles Hill project, the Matouche project. These are large projects or high-grade projects with historic economic assessments, and we're on pathways towards development previously, but there were impediments to developing those projects, which we're looking to overcome. And if we can do that, those call options, we think, can move very quickly into the development category. We do have a portfolio of equities that made up that $80 million that I was saying earlier. And we've been very busy on the M&A front over the last 3 years. I think we're going to continue to be busy on that front going forward. And whether that's bringing assets into the portfolio or rationalizing the portfolio, we have created multiple spin-outs out of both of these companies over the last 3 years. We're going to continue to look at realizing value for the whole portfolio. This is our property position in the eastern Athabasca. So this is the other side of the basin from where from where Fission is. This is where the mines are. This is where the production historically has come from. This portfolio of properties, I think we focused specifically on Hurricane over the last few years. We made that discovery. It's a world-class project, and so most of the attention has been there. The rest of the portfolio has been put together starting back in 2016. Very prospective land package. Hasn't seen a lot of exploration, but particularly in this market, we think it's the opportune time to go spend more time on those projects, and you'll see us do work there in the coming months this year. Hurricane. If you don't know, you should know. This is a tremendous project. The characteristics, it's a standout on almost in every characteristic that you would look at. We own it 100%. The grade, you can see there's a high-grade domain. In the indicated category, it's 52.1%. It's almost mind-boggling when you think about the global average resource grade in uranium at less than 0.1%. It's the highest grade undeveloped deposit in the world. The depth, it's about 325 meters depth. And I think Ross had this exact same graphic, but you can see where Hurricane sits relative to the other deposits you'd be familiar with. Infrastructure. Again, this is the eastern side of the basin. This is where the mines are. We're 40 kilometers from the McLean Lake Mill. There's a road not too far from the deposit, so it's very well endowed on the infrastructure side. Mining method. We're exploring a couple of different ways of mining this. I think the gentleman mentioned Denison's in situ recovery process. We're looking at that. We're looking at surface jet bore mining. Ultimately, the mining method will be decided by how big is this resource, and so that's our main goal, is figuring that out. It could ultimately be a conventional underground mine like Cigar Lake. Project border, we'll talk about that in a second. This is the most important aspect of this whole project, is it sits on a border with a project of Cameco and Orano. The heart of the deposit is on that border. There's work happening on the other side. I'll show you that in a second. Exploration upside, we think there's tremendous potential to grow this resource. We're drilling, we'll start drilling there, if not today, tomorrow. Talk about the border. So here's a plan view of the deposit, and you can see that border line. I don't know if I have a pointer, but that border on the eastern side of that, or sorry, the western side of that border is the Dawn Lake project of Cameco and Orano. I've got a quote there in Cameco's MD&A. For the first time, they started talking about results they're getting on the other side of the border. We know they're having success there. We see their drill pads. There's a big exploration program planned on the other side of that border. We don't know what's there yet, but we're looking forward to the results that they're going to put out there. There could be critical mass just with what we know already and what they have to support a conventional underground mine here. But exploration potential. And Ross talked about pearls on a string. Deposits in the basin typically occur as pearls on a string. Cigar Lake is a perfect example. So in the top graphic here, that's Cigar Lake. And you can see that there's positive mineralization discontinuous over a strike length of multiple kilometers. Right now at Hurricane, we have one pod of mineralization on our side of the border. We know that continues on the other side of the border. What we don't know is, are there other pods on strike of the deposit? And we intend to find out. So last year, we hired a new technical team led by Daryl Clark, who used to be the VP of Exploration at Cameco, and we applied some new technology to trying to identify where those additional pods might be on strike from our deposit. The technology is called ambient noise tomography, and basically it measures the velocity of the rocks subsurface. And what it showed us is above the hurricane deposit, the velocity of those rocks is very low. So when we started into the survey above hurricane, it showed us an image of what that looked like. And then we ran the survey to the east along strike, along the prospective conductive corridor. It showed us areas A and area B look very similar in terms of the velocity of those rocks. And those targets have never been tested. There had been some drilling along strike to the east. You can see the marks on the map there. But these particular areas have never been tested. We're in there right now drilling. The drills should be starting, as I said, today or tomorrow. We're also drilling another project, and we talk about the rest of the portfolio and how prospective it is. The Hawk project is a project that's very high on our screen in terms of prospectivity. So we've been drilling there right now. We've got about 5 holes almost complete here, and we'll put out some results there. We're testing an ant anomaly, that technology we talked about at Hurricane. We ran a survey here. It showed us a very large target. This is deeper. This is a deeper target than Hurricane. Hurricane's 325. This is about 800 meters, and but the target size is massive. The scale is different on this map, but that circle where the ant anomaly is large enough to host a very large deposit a la MacArthur. Okay, so that's the Athabasca. Now we're going to talk about the near-term production potential in Utah. Here are our properties. These are historic mines. These are past-producing mines. They were in production in the last bull market, and millions of pounds of uranium has been produced in this part of the world. It's a proven camp. The mines that we have, the Tony M, the Daneros, the Rim Mine, the Sage Plain Mine, we bought from Energy Fuels a few years ago. And these mines, again, they were past production. They're fully permitted. They can go back into production very, very quickly. They're all within trucking distance of the White Mesa Mill. And we have an agreement with Energy Fuels to toll mill this ore at White Mesa. So what are we doing here? And actually, I think it's important when we show these projects, I think sometimes we gloss over how advanced these projects are. The fact that they are past mines, the infrastructure is all there. You can see it on the right-hand image there. There's a tremendous amount of development, and this is the Tony M mine. This is the largest of the projects on that previous page. There's 18 miles of underground development. 1 million pounds of uranium has already been produced here. So the capital and the time to move this mine back into production is very, very short. We announced a work program here today. We're going to reopen the portal. We're going to do underground sampling. Ultimately, we're going to do an economic study here, and that should come out in the second half of the year. What we would like to do is dovetail the timing of bringing this mine back into production with Energy Fuels' timing of reopening the White Mesa Mill. We talked about the call option projects. So we have Coles Hill. Coles Hill is the largest undeveloped, the largest resource in the United States by an order of magnitude. There's 160 million pounds of uranium in all categories, and you can see where it sits relative to some of the other large projects in the United States. Virginia currently has a ban, a moratorium on uranium mining. We think that's incongruent with what the United States needs in terms of uranium to fuel its reactor fleet. We're working on the ground, lobbying with the politicians to see if we can overturn that moratorium. If we can, this would be a marquee project for our company. Similarly, we have the Matouche project in Quebec. Matouche is the highest grade undeveloped deposit in the world outside of the Athabasca Basin at almost 1% in the indicated category. And you can see where that ranks with, against some very well-known projects of other companies around the world. This project, again, has a hurdle to development. It was on its way into production back almost 15 years ago when it ran into a problem with the First Nations. And the previous management team that owned this, they weren't able to get social acceptance for uranium mining in this part of the province. And so it went into stasis. We bought the project out of bankruptcy. It is a marquee asset. We've been spending time in the community, building our relationship with the Cree. We did the first work program on this project in over a decade last year. We went back into the community recently. They've invited us back to do another work program. We're going to do another small work program there this summer. And ultimately, again, if we can build a relationship and bring this community on board with developing this project would move very quickly into the development category of our portfolio. The team We have 3 members of the Next Gen board on our board: Richard Patricio, Lee Currier, Chris McFadden, and then 3 other board members, 2 of which came over from Consolidated Uranium. But the team on management, it's decades of experience in uranium, in mining, lots of ex-Cameco guys similar to Fission, and other gentlemen and ladies who have worked in the uranium space for decades. Upcoming catalyst, it's the exploration program in the Athabasca Basin. As I said, we just finished drilling Hawk. We're drilling Hurricane right now. U.S. projects, we're advancing them. We think that ability to get in production quickly and give leverage to the current price is important, and we have a real strategy there. We're going to do some work programs on our other projects. Again, if we can't see those other projects move into the development category, then we'll look at ways to realize value through divestitures, spin-outs, or alike. And we're going to continue to be busy on the M&A front, looking to build this portfolio. We do think that bigger is better, and we do think that that investors will back a story of multiple assets producing in multiple jurisdictions. And that's the story.